is decided and the plans are laid down for the performance, laid down for the employees of the organization to achieve this strategy. So everybody is working towards achievement of the strategy or objectives of the organization. Now, in that case, the performance of the employees of the organization also has to be measured. So, how do we measure the performance? What is the performance measurement or management? Is what is the or is the topic which you started the other day. Then what? What are the factors to be considered while determining the or considering the factors for performance measurement is what we looked into. The strategy adopted should be looked at. The CSFs, the objectives of the organization, the nature of business, and the environment in which the business operates is what was considered. Then we've discussed about the advantages and um, disadvantages of financial as well as non-financial measures. Um, when we talk about financial measures, since financial measures were already learned by you in the other papers, so here as such you are not expected to learn them because learning part of it is already done about various aspects of financial measures. So if you're talking about financial measures, um, liquidity is one aspect which has to be measured. The ratios which are used under a liquidity category have to be calculated. It takes care of the current assets, the current liabilities, the position of the business in the in the short run. So how able are they in terms of settling their liabilities in the short period of time? How much cash is available to them? Those aspects can be looked into. What is the working capital? How many days of credit is extended by the organization? How much are they availing the credit? All those aspects are covered under liquidity. Then we have the profitability scenario. So various types of profits, both from income statement and balance sheet, can be calculated here. Since you have already learned this, I think we are not focusing on how do we calculate. But if given a question about any one of these ratios under liquidity, under profitability, you should be able to expand on that and then solve it. But then technically, this is not a part of this paper syllabus, but because we are learning about financial and non-financial measures, the advantages, disadvantages. So the variable which is used to calculate the profitability position, if you are asked to actually use it and calculate that, you should be able to do that. We are not looking at the calculation part, but if expected that we reproduce that uh, expertise, that knowledge here, you should be able to do that. So we've discussed about the advantages and disadvantages. After liquidity, profitability, we also look at the long-term position, which is called as capital structure or solvency, gearing. These are the terms which are used. And then how efficient the business is in terms of generating revenue. We have those things called as turnover ratio, or we call them as activity efficiency ratios. So activity or efficiency ratios are calculated. So I think you know this by now. You must have learned in management accounting. Yes. So now we don't have to actually learn them, but then if you are expected to elaborate on that, you should be able to do that. We've learned about the discussion about advantages, disadvantages was done the other day. Financial measures are not easy to understand by laymen, people who do not have the financial knowledge. Maybe for them it may be difficult to understand that, but um, they they depict a better image of the organization in terms of how is it able to achieve the um, uh, strategy of the organization. But there are other measures also which are non-financial measures which which also give a picture of the organization. So they are easy to use them, calculate them, can be understood by non-financial people. It cannot be distorted by inflation. It has a broader spectrum of management and positive motivational implications. We've learned about Fitzgerald and Moon's building block model, where there are three building blocks, and they are discussed. The first one says that there are 6 dimensions which have to be looked into. The first 2 dimensions are about their past performance. The other 4 are about the performance in the future, expected performance in the future. Then there are standards which are given, which are where they should be set as easily achievable standards. Achievability is a criteria. Then ownership, um, the employee should be able to take up the ownership of the objectives or strategy of the organization. And while deciding the objectives, there should be fairness. It should not be biased towards anyone or partial towards anyone. The strategies which are decided, objectives which are laid down, should be fair. Then we have the reward part of it also, we've discussed. Rewards should have clarity when they are announced. Rewards should have clarity. They should be motivating to, so that the employees actually work towards achievement of the goals. Then they should be dependent on controllable factors. We learned another model which is called as performance pyramid, given by Lynch and Cross. Then they talk about having blocks from top to the bottom. At the top we have the strategic level. Then as we come down, we have the tactical, and the lower level it is the operational. So what are the things which are included here have to be learned. You memorize that and then reproduce it in the exam. um, then we've discussed about the balance scorecard, where there are 4 perspectives. Each perspective can be measured about whether they were able to achieve. It is possible to achieve the uh, strategy of the organization through these perspectives. So for that reason, um, the each perspective, the CSF should be defined, and also the KPIs to measure that. But one thing, all these perspectives should work towards the achievement of the same goal. There is a term called as goal congruence. Everybody is working towards the achievement of the same objective. Right? So the vision and strategy has to be achieved. So all perspectives work towards that. So we've also discussed about what are the advantages and disadvantages, and we've stopped on this note. So the next topic from here, let's continue. The next topic is strategy mapping. How do we map this strategy? Okay, now that we understand about the balance scorecard, let's look at what is strategy mapping. The first thing is identify what are the overriding objective of the organization. Overriding, the meaning of overriding, utmost important. What is the main objective? What is that main focus area? So that has to be understood. Identifying overriding objective of the organization. That's the first thing. Who is SRU? Please write your full name, because when we mark for attendance, we don't understand who is SRU, and there is a possibility that you may not get your attendance. Please write your name where your college people can understand your name. Okay, don't use your phone names and other details while logging into the account. First, the overriding objective of the organization should be identified. After that, it says that determine the main way organization will create value given overriding objective. What is creating value? Creating value, in a way, it is useful, it is beneficial to the stakeholder. That is creation of value. Value is created for the customers, value is created for the other stakeholders like investors, shareholders, and all. So, considering the objective of the organization, considering the objective of the organization, value for the stakeholders would be created, should be created. That's the second step. So first the objectives are identified, and considering the objective, how the value is created for the stakeholders is the next step. The third step is identify financial strategies that support financial perspective. So there are four perspectives which we have already discussed under balance scorecard, BSC. So then it says that identify what are the financial strategies. Financial strategies about how to increase their sales, how to maximize their profit, um, uh, how to raise more amount of capital through various sources, debt capital, equity capital, whatever is the aspect, whatever is the strategy involving the financial terms. Identify the financial strategies that support this. So that's the financial perspective. Then it says that clarify customers oriented. That's the second perspective. So identify what is the customer oriented thing, and then focus on that. Clarify customer oriented strategies supporting overall strategy. So whatever is that, the focus area should be towards the achievement of the organization vision and strategy. So the customer perspective also, how does it help in achieving the strategy of the organization? The next one is internal business process. Internal business process, what does it take care of? Internal business process takes care of the way in the way in which the setup is there for the activities. um, how safe is the environment in the organization? Is it prone to accidents? If there are accidents, what remedy measures are taken? um, then how do they deal with the quality aspect of it? Um, these stages, how do they control scrap, how do they control? So these are various things which come under internal business process. So identify how internal processes will support strategies. That is internal perspective. Finally, the employee perspective is given under learning and growth. So identify skills and competencies needed to support strategies. Do they have that? If they do not have that, what what measures are taken to enhance their skills, or provide training to develop their skills? Those aspects are considered under learning and growth. So do they feel motivated to work in the organization? uh, is their development taken care by the organization? Management takes care of their development, training is provided, motivational aspects are taken into consideration. That is what is considered. But all of them, but the important point what we have to understand is, even if it is divided into four perspectives, and each perspective is understood carefully, the important point here is all of them are working towards the achievement of the same strategy. So there is goal congruence. It is not individually. Their focus should not be towards their perspective, but they should be working towards the achievement of the organization objectives. Then we have another concept in which the performance can be measured is by way of benchmarking. Benchmarking, what is benchmarking? What's the meaning of benchmarking? I can understand whether someone's listening to me or not. What is benchmarking? Setting standards. Why? Setting standards so that um, the performance is comparable, comparison for that reason. But why should this be done? So that the best practices are identified, the best ones are identified and decided as a standard, so that everybody can look towards it and compare their performance in a way. It motivates them to work towards achievement of whatever others have achieved. Okay, so this is a standard setting. Yes, standards are set, standards are identified and decided as the standards. So the best ones are identified for their best performance. They are decided as standards in the organization. So everybody whose performance is measured in terms of comparing with the standard, comparing with the best one. So that is the whole process of benchmarking. So benchmarking is, first thing is identifying the best one, the best practices, the best units, the best entities are identified and they are decided as benchmarks. So other units or other entities, when their performance has to be measured, the measurement is by way of comparing it with the standards. So um, it motivates them to perform better. So benchmarking can be decided internally. Internally there can be benchmarks or there can be standards decided, or in the external environment also standards can be decided. If it is internally, one unit can be compared with, the performance of one unit can be compared with the performance of another unit. So let's say that there are three business activities under an organization. So one entity can be compared with another entity internally within their organization. Sometimes the peers or the competitors or the rivals in an industry are considered, and one competitor who's doing well, whose performance is better, can be decided as a benchmark, and all other peers in that industry, their performance is compared with the competitor. Okay, whoever is best is identified, and their performance is set as a standard, and others performance are compared with uh, the performance is compared with the standard or the competitor or the peer who is doing well. Internally they can have a standard among the processes and activities. So if one activity, one process is doing well, one activity is doing well, then that is decided as a standard, and all others, their performance is compared with the standard one. So the standards can be internal, standards can be external. Sometimes if this is not possible, the industry average can be considered as the standard, and their performance can be compared with the industry average. So that is the process of benchmarking. There is an advantage in that, that is um, the best things can be identified as best and others can be motivated to achieve the best thing in the industry. Implementation of benchmarking and the problem. So for implementation part of it, identify what is wrong with the current organization. Why do we actually have to compare? What is the concept of comparison? To see that something is not going well. So why is it not going well? To understand that, identify what is wrong with the current organization, then someone else who is doing it better, identify that, identify the best practices elsewhere. If there is something wrong, if they are not able to achieve their profitability, if they are not able to achieve cost cutting or cost reduction, if they are not able to cut down on their wastages and scrap, their employees are not motivated towards working. So if there is a problem, first identify that problem. Also identify if someone else is able to achieve that. So identify best practice elsewhere. whoever it is within the organization, outside the organization, whoever it is, if they are not able to achieve that, then uh, and someone else is able to achieve that, identify. You not able to achieve that, identify. Someone else able to achieve that also should be identified. After that, preparing for and undertaking a site visit. Just a minute. ఎందుకే బాధగా I'm sorry. Preparing for and undertaking a site visit, evaluate and communicating the result. So, site visit is technically you may not actually have to visit the site, or you can also take a visit of what is their performance and make a comparison with that. That is the point here. So, preparing for and undertaking a site visit, evaluating and communicating the result. So, comparison should take place. So, comparing with whatever are the variables which are considering, uh, take up that. So preparing for and undertaking a site visit, evaluating and communicating the results. So what are the steps which we identify? First, we have to identify that there is a problem. So there is an opportunity. Some sense it is considered as an opportunity, an area where you can do some work and bring about some changes. Then identify who's the best among that field or that area, or those units or entities. So identify who is that. So identify why is their performance best. So measure the performance and measure the performance internally of whichever unit you feel that the performance is not good. Then how do you compare? Comparison is not that you visit a physical place and then identify. You identify what are the drivers which can be used to measure the performance. So identify how do you measure the performance. Suppose you are talking about cost reduction. So what are the costs which have to be controlled? So your drivers would be cost. If you're talking about profitability, what are the variables which you will use to measure the performance, like profitability, ROCE, ROA, ROI, turnover, activity, those ratios. Identify what are the variables. How do you measure that? After that, performance comparison. So do the calculation, do the necessary measures, take up the necessary measures in which you measure the performance of the um, uh, of the entity for which you are considering this, and also the one which is considered as best. So measure the performance and compare that and identify the reasons why the performance is not better earlier, right? That is the way in which the benchmarking process is implemented. And what are the problems in that? The problems is lack of commitment by management and staff. That is one reason. Okay. Then next one, what is best practice? Best practice, companies unwilling to share data. That's another thing. So what is best practice? Sometimes they do not want to lose their confidentiality, whatever aspects are. So the strategies would be revealed if they share that confidential information. The strategies will be known by everyone. So to avoid that, maybe the ones who are considered as best will not be willing to share their data. Okay, the whole activity of comparison, comparing the best one with the others are compared with the best one, the whole activity is time taking and costly. Then backward looking, what is best today may not be so tomorrow. So it is based on the actual performance. It is not about what can happen tomorrow. So today whatever happened, it is not necessary that it will repeat again. That the comparison activity is okay. There's another topic called as economic value added. Did you ever learn about economic value added? Are you able to listen to me? Did you ever learn about economic value added? Please respond. Did you ever learn about economic value added? So the concept of economic value added um, is a financial measure which is used to calculate what is the economic value added. Um, Making certain adjustments to the conventional profit or the controllable profit, what we call it as EBIT. So take the EBIT and make certain changes to that to identify what is economic value added. But what is the concept behind that? Normally, when we understand what is the profit, there that is considered as the measure, and um, it is rated as a well-to-do organization or something. Then see, the income statement has sales minus cost of goods sold, which is gross profit. Um from this, operating expenses are deducted. Gross profit from this, operating expenses are deducted, and then we have the operating profit, of course subject to some other adjustments. I'm not elaborating on that. This one is called as the EBIT. Right? If the EBIT position is good, then it is evaluated as a profitable organization. But then there are so many other transactions which have to be taken up after EBIT, because EBIT is the profit which is available to all the investors. So from the EBIT, interest has to be paid. Then the tax liability also has to be adjusted. So this is called as EBT. From EBT, tax is deducted, and then the resultant figure is called as EAT. From EAT, we see all types of dividends, preference dividend and equity dividend are paid, and also the adjustment of what is the amount of profit which is retained in the business for reinvestment and other purposes. So the profit which is earned is not sufficient enough to measure or gauge the value which is created to the stakeholders. That's not sufficient. So what does it do? There are other costs of capital, like interest has to be considered, then dividend payments have to be considered. So these are other costs which are still to be met. That would have an impact on the investors if there is not sufficient amount of profit available to them. So considering what amount should be paid to them, the interest amount, the dividend amount, also considering that, um, what is the available profit should be looked into. So the profit which is available should take care of the cost of capital, because the investors, the stakeholders also have to be taken care of, because that also again has an impact on the business. If the stakeholders are not happy about their return, if the profits are not paid to them in the form of dividends, the stakeholders definitely are dissatisfied, and that will have an impact on the business. So the mere controllable profit or the EBIT availability is not sufficient enough. It has to also take care of the cost of capital. But before that, before looking at the cost of capital which has to be deducted, then there are other things also which have to be considered. In this EBIT, at this EBIT level, okay, I said we have not elaborated here. That is from gross profit, there are operating expenses which are deducted. There are certain non-operating expenses also which are deducted. Non-operating expenses like um, if assets are sold, loss on sale of asset, any economic depression or depreciation, that is, if there is any, the assets are revalued and there is some kind of impairment, that is, the value has to be brought down. Those things, these are all, these all do not result in actual cash flow going out of the business, but still, that has an impact on the profit. So the non-operating, it deducts the operating expense, it also deducts the non-operating expenses. Then there are certain non-operating incomes also which should be considered, that is, add back all the non-operating expenses, like if they have made an um, investment in some other entity, like they have purchased bonds or shares of another business and they are earning some interest or dividend from those things, that is not their main operating activity. What is their main operation? Buying and selling of goods is their main operation. But if they have invested in some other business and on account of that if they earn some uh, revenue or something, then that is non-operating in nature. Then if there is any asset which is sold and gain is realized, that is again a non-operating one. So after we make these adjustments, we call this as the profit. Okay, profit here we call this one as earnings before interest and tax. Otherwise, this is only mere operating profit. But otherwise, then if we elaborate it further, then the one is called as EBIT. This is operating profit. Okay, so now this is EBIT. So EBIT, when you start with EBIT, you understand that there are certain transactions which are considered, which are operating, non-operating. So all non-operating, someone wants to say something? Anyone wants to say anything? Sahitya doesn't even want to listen to that. She didn't switch on the mic. Mere presence in the class. These things also will be considered. Convey this message to Sahitya. Sahitya, Gauri. So then um, those non-operating expenses, non-operating incomes also should be adjusted because we are considering what is the transaction of the business, what is the main trading activity. So when that is to be considered, make all adjustments of non-operating, non expenses and incomes. After making all those adjustments, then from that the profit should also take care of the cost of capital. So cost of capital charge on divisional assets, that also has to be taken care. So that is called as then it is called as the economic value addition or economic value added. So this is another financial measure which is used to measure the performance of the business. Then we have shareholder value analysis, which is SVA. It says that it is a variation along the same theme as economic value added. The main aim of the organization is to add value to the shareholders' wealth. This can be defined in a variety of ways and usually results in the form of balanced scorecard being used. It is important to remember that value is not just a financial concept. Shareholders can attach non-financial value like social responsibility of the company, not testing on animals, positive human rights records, or these are examples. Okay, Rappaport identified 7 value drivers for these things. These are the 7 value drivers. Okay, how is the value to the shareholders added? One is sales growth. Second one is life of the project. Operating margin, operating profit margin, working capital, cost of capital, asset investment, and taxation. These aspects add value to the shareholders. So remember that. This can be remembered as SLOCAT. Is it important that we calculate what is SBA? How is it important? What is the impact? Why is it important to add value to the shareholders? What happens if they are dissatisfied? They are the direct investors of the company. What happens if they are dissatisfied? If they are dissatisfied, that will have an impact on the um, profitability of impact on the net worth of the organization. Why? Because um, they may withdraw their investment, and if once that trend catches up, then other investors also come forward to withdraw their investment from the organization. So that will have an impact on the net value of the organization. Let's discuss what are the advantages and disadvantages of EVA and SVA. Adjustments made to profits means we are looking at cash flows. When there are adjustments made, what adjustments are made usually? The adjustments which are made are all non-cash, non-operating transactions are adjusted back. If they were earlier deducted, they are they should be added back because they were earlier deducted. If they were added like um, revalued unrealized gain is if it was earlier added, it has to be deducted. Example, unrealized gain. What does it mean? Whatever is the value of transaction which is accounted in the books of account, it may not have the same value in the market. So if the market has a higher value, then in that case, the book value is allowed to be adjusted according to the market value. Now, usually after a time period, these revaluations are taken up. So, if on account of revaluing that, if there is any difference in the value of asset, so there is a gain which is realized called as gain on revaluation, unrealized gain on revaluation. The asset is not sold, that the gain is realized without even selling the asset. The difference in the price is adjusted, which we call it as gain on revaluation. So that was earlier added, but that's a non-operating. It is not resulting in any cash flow. So that has to be deducted. So whatever we are doing it, that is to understand what are the actual cash flows. So when we eliminate all the adjustments on account of non-cash, non-operating, adjusted in the income statement or deducted or added in the income statement, they are readjusted to understand how much is the cash flow from the operating activities. Okay, that is consistent with the NPV. NPV so should help the organization to maximize shareholders' wealth, and cost of financing is emphasized. So the formula talks about deduct cost of capital. But otherwise, if cost of capital is not taken into consideration and if the profit is not sufficient to meet the cost of capital, then obviously the shareholders would not be paid dividend. So that was not, otherwise that was not highlighted by way of calculating the profitability ratios. The profitability ratios were not highlighting upon how much profit is available to the investors, the shareholders. But when EVA is calculated, it looks into whether the shareholders, the investors are paid their return. So there is greater emphasis on the cost of financing. What are the disadvantages of that? So accounting data used may contain subjective estimates and provisions, ignores items which do not appear on the balance sheet. So some items which are not included in the balance sheet, they are not considered like goodwill. Often confuses management. So this is kind of a little confusing because we are um, the conventional method of accounting all incomes and expenses into the income statement. There you are categorizing them, you're separating them to be as operating, non-operating, cash, non-cash, all those transactions. So it is not so easy to arrive at decision. So it is kind of confusing to the management. It is a time taking and a costly affair. Judgment required in estimation of costs of capital. How do we use the cost of capital? What is that which we assume to be the cost of capital? So judgment is required in estimation of cost of capital. So that is the concept of economic value added and shareholder value added. After that, we have another concept called as triple bottom line. Triple bottom line is focusing on three P's, what we call them as profit, people, and planet. Okay, that's the concept of triple bottom line. Expansion of traditional accountancy reporting systems to include social and environmental performance. So, apart from the accounting transactions, it is also including the reporting aspect, the reporting of the social and environmental performance. The first one talks about profit or economic prosperity created by the organization for society and local community. The people, that's for the social justice, fair and favorable business practices. For the planet, that is the environmental management accounting or environmental quality, use of substantial environmental practices. Okay, this is going above, over and above the regular accounting aspects. They also consider what is the amount of profit which is created for the society and local community. So it focuses on corporate social responsibility, focuses on what is the contribution of the organization towards the society. So that's the profit aspect. Second, the people are considered. So what is the fair and favorable business practices which are adopted by them, and what impact does the organization leave on the environment. So to ensure that the negative impact is less on the environment, do they comply with the rules and regulations is what is considered under that. Then what are the advantages of a triple bottom line? It attracts ethically aware customers and staff. Then costs are reduced, less chance of government regulation. When would the government take a regulation? When they do not comply with the rules and regulations, the procedures and policies are not followed. Then in that case, the government will have to look into what are the effects of that organization. So here it says that less chance of government regulation. Then disadvantages of TPL are difficult to measure and quantify, may lead to management conflict. Conflict because some of them may give utmost importance to these aspects. Some of them may be focused towards maximizing their profit. So this may lead to management conflict. The next concept is communication in performance management. When an organization has decided upon its performance measurement mix, this needs to be communicated to employees, including what is being measured and why, how each employee will be affected, request for feedbacks. Benefits of this communication, it talks about we've learned one model where Fitzgerald and uh, Moon's building block model. Just a minute, I'll take you to that. We've looked at the standards which are set and the rewards which are announced. They should be motivating. They should be clear and motivating, and they understand that yes, their performance is evaluating, and based on these parameters they are evaluated, and that gives them a clarity about what is that they have to achieve so as to avail the benefits. So here, if there is a performance measurement thing adopted in an organization, it has to be conveyed, communicated to the employees of the organization, so that they have a clarity in terms of what is that they have to achieve. So how are they going to be evaluated, what is the measurement metrics which they are following, what is being measured and why, how each employee will be affected, should be communicated to the employees. They should understand what is going on, how is their performance evaluated, what measures are taken care, so what is being measured and why, how each employee will be affected, and the feedback of the employees also should be collected. Request for feedback from employees about the appropriateness of the measures. Now, in that case, if such a rapport is there among the management and the employees, then they understand the feasibility of their targets and the difficulties in achieving their targets. So, accordingly, the appraisal can be taken up of the employees. So, what are the benefits of this communication will include? Okay, increased employee buy-in. So, they also feel motivated to contribute, their opinion is considered, their then after the feedback, their views are also taken into consideration, so they feel motivated to achieve the target. So increased employee buy-in, increased employee understanding of how to meet the targets set, improved motivation, ensuring targets set are actually attainable. This one topic we'll discuss and then go to do the MCQs. The next topic is integrated reporting. Integrated reporting. Um, what is reported? Reported in the financial statements are about the financial performance. That is what is reported in um, the financial disclosure reports which are prepared. Usually consists the accounting perspective. The financial perspective is reported. Accounting itself indicates accounting itself is defined in such a way that um, what is accounting? Accounting is the art and science of, it starts with says that it is the art and science of recording, classifying, summarizing those transactions which are measurable in terms of money. What is the purpose? So that the transactions can be analyzed and interpreted. That is what is the meaning of accounting. So whatever is the way in which it is expressed, it expresses that. So those things which can be measured in terms of money are to be included in the accounting transactions. They have to be recorded, classified, summarized, so that the transactions can be analyzed and interpreted. That is the meaning of accounting. Then those transactions measurable in terms of money only are accounted, they are recorded, and they are present in the financial statement. These financial statements are annually, periodically they are disclosed, so they are published. But there are other aspects of the business also should be given importance. It's not only the financial aspect, but till now we've learned about the other perspectives of the business. It's not only financial. There are non-financial perspectives also. Now those things also should be reported. A report on those aspects also should be prepared. Those reports should be integrated. Integrated is combined. Integrated with the financial statements of the organization, and should be used for disclosing, publication or publishing. So while reporting the financial statements, other aspects of the organization also should be integrated with the financial statement, and then they should be disclosed. So integrated reporting should capture the strategic and operational actions of management, not only the accounting perspective, the financial perspective, but other actions of management also should be included, and they should be integrated with the financial statements, and they should be disclosed. That's why you must have seen annual reports of companies. So annual reports of companies, it's a volume which they disclose it. It is not that they have a trading P&L account, a balance sheet, and a cash flow statement. That is not all what they have. They also indicate about their activities in terms of what is their current position, long term position, what decisions do they have, how many assets and liabilities do they have, the details about it, what is their credit policy which they are adopting, what is the material procurement policies what they have, the labor related issues, the lease agreements they are into, the joint ventures, the strategic alliances. These aspects are also all included in that, and then they are presented there. So the integrated reporting should capture the strategic and operational actions of the management, and there are 7 guidelines to produce IR, integrated reporting. First one is strategic focus and future orientation. Okay, what is their focus, and how are they perceiving their business to operate in the future? The connectivity of information, what softwares or what technology are they using, about integrating the information, connectivity of information, how do they capture the information and make it available, connectivity of information, the relationship with their stakeholders, the materiality, the conciseness, reliability and completeness, consistency and comparability. Conciseness. What is materiality? Let's look at what is materiality. What's the meaning of materiality? It's been a very long explanation going on. In such long theory classes, I get a doubt whether someone's still there sitting with me listening to my class. I mean, when we are discussing some MCQs and all, it's fine. But then, what is the meaning of materiality? Am I audible? Am I audible? What is accounting? Ah, fine. Um, Something of significance. Something of significance, which has some significance in terms of whether they should be considered for disclosing. So that is whether that should be included in the information which is chosen to be disclosed. So the summary, if it is shown, is sufficient. So every minute detail, if they do not have any significance or importance, need not be disclosed, but the summary of it, if it is disclosed, that is sufficient. That is what it means. That conciseness. Conciseness, as many details as possible, if they include that um, uh, which has importance should be included. So that's conciseness. So some of the transactions which are not accounted in the, or which are do not recorded in the books of accounts because they are not measurable in terms of money, or some reason if they are not included in the books of account, some other ways in which they can give that yes, clear information. Some other way they can I mean, disclose this. That is notes to financial statement or a footnote or something. So somewhere they have to disclose this information. So that's conciseness. Reliability and completeness. The information which is disclosed should be reliable, and it should be complete. It should not be misleading. It should not misrepresent any aspect of it. So that is reliability and completeness. And consistently, they should follow the methods which they have adopted for accounting aspects. Like for example, in depreciation we have various methods, in inventory valuation various methods. So any method which is adopted by them should be consistently followed period after period, so that it gives them a chance for comparison, for the purpose of comparability. Then we have there is another concept associated with integrated reporting is what has to be included in the integrated reports. The integrated reports, uh, when we are talking about along with the financial statement, something else also has to be included. What are we actually talking about? We're talking about the 6 different types of capitals which have to be included. So that is what has to be highlighted. The first one talks about, the first type of capital is the financial capital. Financial capital, shares, debentures, capital which is raised. All those things talk about financial aspect. Then we have the manufactured capital. What do you think comes under manufactured capital? Manufactured capital talks about the equipment, machinery which is used. All that comes under. Let me put you something so that you can have a better idea about what are the 6 types of capital. Please have a look at this one. Integrated reporting and capital. So there are 6 types of capital. I hope you are able to see the new slide. The financial capital talks about shares and cash and debentures or investment in bonds, and all those things are financial capital. Manufactured capital, we have it as the machinery, the knowledge which is needed. I'm really sorry, the machinery, the buildings, tools, and all other things which are used in manufacturing activity. Intellectual talks about the employee knowledge. The employee knowledge talks about the intellectual capital. So those things also have to be mentioned. How knowledgeable are their employees? Those things are also a capital for them. So that has to be valued on certain parameters, and then that also has to be integrated with the reporting. Then human capital talks about the employee skills and motivation. Then we see social and relationship, what MOUs have they signed with others, the partnership with trade unions and the communities, what activities do they take up to provide information to the various stakeholders or members of the society. What is that they take up, all those in terms of being associated with various organizations, talks about the social and relationship. Then we have the natural capital, which is renewable and non-renewable material resources. What resources do they have? So the topic what we are looking at is what is integrated reporting. Integrated reporting, while disclosing the financial statements, other aspects also should be taken into consideration. So those other aspects also should be for which the report should be prepared, and these reports should be integrated with the reports of the financial statement, and they should be chosen for disclosure. Okay, so what guidelines are to be used, and what are the different types of capital also should be considered. That's why whenever you look at the annual statements of any particular company, you understand that it is not only these financial statements, but there is so much other information which is included. What is the reason for including so much of information is there are various stakeholders. We looked at the beginning only. There are various stakeholders of the organization. Now each stakeholder um, draw some information from the organization, which they use it for their decision making. So by integrating the information and reporting that, they would be providing information to the stakeholders to take better decisions. That is the purpose behind it. Okay, so this unit we've done. The next topic is change management, but before that, let's complete what are the MCQs which we have in the examination kit related to this one. And then go to the change management next. I think we've done till 126. Let's start from 127. So are you ready? GHA is a provider of training courses for surveyors. It is one of the only three main organizations that provide this service in country K. GHA is uncertain whether to grow by opening new training facilities across country K or by acquiring one of its rivals. Which three of the following are factors that would encourage GHA to choose organic growth rather than the acquisition? Organic growth is growing uh, gradually, incrementally, but acquisition, when they acquire the controlling stake in another entity, they can grow at a faster pace, diversifying their activities, products, and then growing at a faster pace. So here the comparison is between acquisition and organic growth. So which three of the following are factors following are the factors that would encourage GHA to choose organic growth rather than acquisition? Please respond. Select three items. What happened? Not even one option you've selected. Three you have to select. You have to select three. What happened? Even one is also not selected. Why would they choose organic growth over acquisition? Keep thinking. Keep thinking. Okay, everybody is agreeing with C. The government of country K has strict rules on monopolies and mergers. Yes. What about A and B? Let's see A and B also. A is GH is under pressure from major shareholders for rapid growth. In that case, they will go for acquisition. B is GH has relatively low cash reserves and little access to additional finance. B is also because they cannot afford to acquire some other business, so they go for organic growth. Okay, that is also the right thing. E is GHA's rivals have significantly different corporate cultures to GHA. Oh no, D is also there. One of GHA's rivals may soon be acquired by a multinational training conglomerate with significant resources. What is conglomerate? This is one type of merger. Conglomerate is one type of merger. Combination. One type of merger. This is unrelated products, diverse products. So, one reason is one of GH's rivals may soon be acquired by a conglomerate, multinational training conglomerate with significant resources. Should we go with D or not? E? Should we go with E or D? E says GH's rivals have significantly different corporate cultures to GHA itself. So, which one is more appropriate? E? Yes, because the corporate cultures are so different, therefore, they do not want to go for acquisition, but they want to continue with their organic growth. Why not D? My point is, why not D? Either. Any logic why we should not go with D? They are choosing organic growth. They are not choosing acquisition. If they choose acquisition, some diverse business coming and acquiring and being a part of that works out well. But here the reason why they want to choose it, because they do not gel well with such environment. They are not looking at acquisition, therefore D should not be taken into consideration. Fine. The next one, 128. AL PLC has a skilled electronics manufacturing company wishes to enter the market for the production and sale of communication satellites. However, the cost of creating production and launch facilities is significant, with no guarantee of eventual success. AL has therefore approached OPO, a company based in the aviation industry, and suggested that the two companies collaborate on the creation of appropriate satellite production facilities, sharing expertise as well as the risks and rewards equally. Which one of the following methods of joint development would be most appropriate for the collaboration of AAL and OPO? One method. Which one? Only one answer. Joint venture. It's not licensing that they provide license. It is not informal strategic alliance. Um, Shweta says informal strategic alliance. What is the meaning of strategic alliance? Strategic alliance says that two or more business entities come together without starting an entity. They can, if they continue with the business, it is strategic alliance. Is it informal? In the first place, no. They are coming together with an idea. It says that there is one is AAL, and then AL has approached OPO, a company based in the aviation industry, and suggested that the two companies collaborate on the creation of appropriate satellite production facilities. So they want to start their entity. They want to come together, start their entity. If there is no such entity which is going to be started, in that case we call it as alliance. So being in themselves, being with their entity, if combinedly they take up some business activity without setting up an entity, we call that as an alliance. But there is nothing about alliance. They want to set up a facility, so they want to start a venture. A new entity has to be created, so in that case we call it as joint venture. Shweta, is that clear? Next one, QQH is a new chain of restaurants which has two premises in the capital city of country H. Just give me 1 minute. 1 minute, I'm back. One. I'm sorry, I'm back. You want me to scroll to the 128th question? Yes, Pooja. Okay. So 129, QQH is a new chain of restaurants which has two premises in the capital city of country H that have been open for 2 months. QQH is owned and solely managed by R, who has little experience running a business. QQH has been successful in the capital city, so R wishes to grow the number of restaurants in the chain rapidly, but currently has little additional cash to invest. So he has decided to start selling QQH franchises in towns and cities across its home country. QQH has a very distinct style for its restaurants, and R wants to ensure that this was replicated across all franchised premises. How suitable would franchising be for QQH? Choose one of the following options. They're considering franchising, isn't it? Franchising is allowing others to set up their own business using their brand name. That is franchising, isn't it? So QQH has been successful in the capital city. So R wishes to grow the number of restaurants in the chain rapidly, but currently has little additional cash to invest. So he has decided to start selling QQH franchises in towns and cities across its home country. QQH has a very distinct style for its restaurants, and R wants to ensure that this was replicated across all franchised premises. Why? Why not very? Because it has a distinct style, and um, the individual ideas cannot be implemented. They have to go with the model. Whatever is the model, they have to follow that. Okay. So that is one thing. And it says that it will be difficult for control. Yes, it will be difficult to control because it wants to be selling this across the country. Okay, across its home country in various towns and cities. So having a control on that may be difficult. PPW manufactures refrigerated units. It has factories in country A which produce motor units, as well as other factories in country B which produce the refrigerator casing and other components. PPW then sends these goods to its facilities in its home country, country C, where they are assembled into the final product, which is sold to various countries around the world. Which international growth strategy has PPW adopted? D. Exporting. Overseas manufacture, where are they manufacturing? Where are they manufacturing? PPW then sent these goods. It says that it manufactures refrigeration unit. It has factories in country A which produce motor units. Manufacturing is done in the home country. They are selling these to other countries, sending them there, assembling them, and selling it in various countries. Okay. So, is it a multinational? Is it overseas manufacture, transnational, and exporting? It's not exporting. Someone started with the answering exporting. It is not exporting, right? It has its units across various countries. It is multinational. Yes. The number. So it's 130A. 130 is A, multinational, because it has various um, units in other countries. So, which is sold to various countries around the world. 131. BOQ is the charity which employs a large number of disabled staff members. It manufactures and sells mobility aids such as crutches and has the mission statement to support the citizens of country F who are in need. In the last 2 years, however, BOQ has seen a significant drop in the number of mobility aids it has sold as the market has become flooded with cheaper imported products. This has led to BOQ posting significant losses. At a recent meeting with the other trustees, the CEO of BOQ suggested that the charity should consider outsourcing much of BOQ's production overseas to ensure the charity continued to be able to afford to operate. He noted that staff were not heavily unionized and that the outsourcing process would not break any laws in country F. The outsourcing strategy, there are uh, missing words in gaps for 1, 2, and 3 given as A is, B is not. Okay. The outsourcing strategy dash suitable, the outsourcing strategy dash acceptable, the outsourcing strategy dash feasible. So whether it is suitable, not suitable, acceptable, not acceptable, feasible, not feasible. So that is what you have to write here for 131. Please answer these things. One should be A or B. Two should be A or B. Three should be A or B. That way. No, because uh, there are three aspects here: suitable, acceptable, feasible. Suitable for the nature of business, acceptable by all the stakeholders, feasible that they have the facilities to take up the action. So that is feasibility. Suitability, suitable to the nature of the business, acceptable to the stakeholders of the business. So in that case, the three are different. One is two of you have given. One is A. Is it A? Is it suitable for the business outsourcing? Pragdi has given one is B. Why do you think is one is B? Because there is a drop in the mobility aids which are provided. In the last 2 years, however, BOQ has seen a significant drop in the number of mobility aids it has sold as the market has become flooded with cheaper imported products. So in that case, if they are thinking of BOQ's production overseas to ensure, is that the case for outsourcing strategy? Suitability, does it suit their business? When do we think of outsourcing? What is the parameter when we think about outsourcing? The parameter is about if they're we compare with the variable cost and the fixed cost. See the costs which are in control, cutting down on the cost. If they see that no, no, it's not about even, it's not even about cheap product. If their variable cost is greater than the um, purchase price, then they go for purchasing. If it is less than that, then they think about producing it here. Okay, there is a concept of recovering their fixed cost also. Here they are employing a large number of disabled staff. In that case, if they outsource that, then they have to shut down the unit, and where they have to um, um, I mean close down the unit and eliminate certain costs. So here they are into a charity business where they are employing large number of disabled staff. So if they go for outsourcing, the entire activity, the production activity will have to be shut down, and they will be unemployed. So that's one point. So the nature of business is suitability. Okay, nature of business is suitability. Acceptable by the stakeholders. Okay, so first one, it is not suitable for their business. They are a charity business. They are employing disabled people, so it is not suitable for them. Then comes outsourcing strategy is acceptable or not acceptable to stakeholders. Is it acceptable or not acceptable? Not feasible? Who are the stakeholders here? Who are the stakeholders here? We see that. At a recent meeting with the other trustees, the CEO of BOQ suggested that the charity should not consider outsourcing. One stakeholder is employees, another stakeholder is the trustees. They are okay, so it is not acceptable with them. You are not catching the point. It is not acceptable to the stakeholders as well. Acceptability, I told you, it is uh, suitability talks about nature of the activity. So the nature of the business, acceptability is with the stakeholders. One stakeholder is employees. That is not uh, they also get affected. Trustees are not agreeing. Therefore it is not acceptable to them also. Whether is it feasible for them to implement that? Do they have the possibility? Feasibility is about possibility. Feasibility talks about possibility. So is it possible for them to implement that or not? Possibility is there. Point here. Don't get confused about that. Possibility is there because there would be no resistance from the employees because they're not heavily unionized. There are no other laws also which can restrict them. So feasibility talks about possibility is there for them. Feasibility is there, but it doesn't suit their nature of business because they are a charity business, okay, not for profit organization. Then the stakeholders are getting affected, therefore they are not agreeing for that. So then also it is not acceptable. But if they think of doing that, they can do it. That possibility is there. So that's the important point here. So don't underlook what is the nature of the business to understand the suitability. Don't underlook the stakeholders' interest. Employees are not would be affected, and trustees are not interested. So it is not acceptable. But it is possible for them. If they think of that, it is possible for them to do that. So how do we answer this? One is B. Who is also B? Three is A. I hope I am clear with this one. Do you understand? CHA is an airline based in country B. It has a strong reputation for quality and caters to the premium end of the market with a particular focus on business travel customers and wealthy holiday makers. To support this, it offers excellent customer services supported by large number of unionized staff, convenient flight schedules, comfortable airport lounges, and a large amount of legroom on its aircraft. Recently, country B has suffered from a major recession, which has led to a significant fall in CHA's revenues and profitability. CHA has noted that many of its holiday maker customers have moved to cheaper budget airlines. These airlines, of which there are many in country B, have low cost bases, and this has allowed them to offer fares at far lower prices than CHA. However, they do not offer the same level of service and have no business class offering. CHA has a small cash surplus, and the new CEO of CHA has suggested that the company uses this to relaunch CHA as a budget airline. Many of the other members of the board of directors have reacted angrily to the suggestion, saying that the CEO clearly has no understanding of the CHA's culture or the extremely negative reaction the company staff would have to the proposals. Using the SAF's framework developed by Johnson and Scholes, should CHA adopt the CEO's proposal? Select any one of them. Should they accept the proposal? So all three of them are there: suitability, feasibility, and acceptability. So considering that, we have to give the suitability, feasibility, acceptability. I think by now you are clear with what is suitable, what is feasible, what is acceptable. Acceptability, stakeholders. Um, Feasibility is the possibility, suitability is for the nature of business. Please come out with the right answer. Please come out with the right answer. What happened? No one is responding. Something, see, there's nothing right or wrong or anything like that. We are only discussing how to look at these questions. Please respond. Please respond. D, C, yes. D is it's not proposal is not suitable, feasible, and acceptable. Okay, so most of you are going with the why? Why? Um, it's an airline business based in country B. What's the proposal? All of you are going with D. Stakeholders are not agreeing. Stakeholders are not agreeing. Okay. The it is not suitable also because they cater to the premium end of the market. Fine. So now to use this and relaunch CHA as a budget airline. So it doesn't go with the nature of business. Stakeholders are not agree, and also it is not feasible to do that. Why? Possibility is not there because there is so much of resistance from them that they cannot go for that. Okay, so D is the right option. All aspects they are not favorable. They are not agreeing with that. So D is the answer. Okay, we'll do 133 and then go for a break and come back and discuss the other questions under strategic control. JJC PLC is planning to undertake an evaluation of a particular strategy using the SAF model popularized by Johnson and Scholes. Which one of the following strategic analysis models is JJJ most likely to use to help it decide whether the strategy is acceptable? Should they go in with SWOT analysis, pest analysis, resource audit, or a stakeholder mapping? So this one also D is the answer. Stakeholder mapping, that is the answer. Okay, go for a break. Come back in 10 minutes. So then we'll continue with the other questions and then go for change management. If time permits us, maybe we'll do the change management, start with that. But I think there are many questions here under the other topics of this particular chapter. If possible, we'll finish that and then go. Otherwise, we will start the change management topic tomorrow. I don't think we'll be able to. 131. 131st, what is it? The outsourcing strategy um, is feasible or is not feasible. Is that the one? So it is it possible for them to go for outsourcing? Possibility part of it, we have to look into that. Possibility is there because the staff members, if they go for outsourcing, they have to close down on this unit of manufacturing, whatever is that. So if that is the case, the staff are not heavily unionized, so there will be no protest from them. So they will not protest anything against that. Is one aspect. Second one is there are no laws which can stop them from going for outsourcing. So they have a possibility to outsource it. So it is possible. It is possible for them to go for outsourcing, but it doesn't suit their business. It doesn't suit the nature of work which they've taken up, because it's a charity unit employing some disabled people, and the stakeholders are not agreeing. So it is not suitable, not acceptable, but feasible. But possibility is there. Okay. Okay. Go for a break and come back in 10 minutes. It has a large call center to deal with queries and complaints from local residents, and aims to help callers find the information they need. Callers are asked to grade the satisfaction levels from 1 to 10 once they have completed their call, depending on how satisfied they were with their service. Currently, the higher the average grades given by callers across the year, the higher the bonus given to call center staff. The call center experiences a high volume of calls, with a number of calls going unanswered. Q has recently decided to change the performance mix for its call center staff. Staff will now be assessed on three separate measures: the number of calls taken um, by the by the center in the period, average speed with which the call is handled, and the total number of complaints about call center service received by Q. Each of these three measures will contribute equally to call center staff bonuses. Based on the above information, which two of the following statements relating to the proposed changes to performance measurement by Q are correct? Can we think A is correct? The new performance measurement mix may suggest to staff that quality of assistance given to callers is no longer a high priority. Are they focusing on quality? These three measures, all the three measures are not focusing on. They are only looking at the quantity aspect, is number of calls taken by the center, the speed with which means that they are not listening to the caller's complaint. So they are in a rush to finish it off. So that is another issue. Fine. Therefore, quality aspect is not considered there. So we can go with A. A is one option. The performance measurement mix should not be changed as this will disrupt the culture of Q's call center staff. How do we identify whether it will disrupt the culture of Q's call center staff? Am I audible? Nobody is responding. This is not the case. The new performance measurement mix measures may conflict with each other, causing confusion among call center staff. What is the reason for confusion? Is there any confusion? Is there any confusion? Do you think it would be resulting in conflict? Or the new performance measurement mix is inappropriate as it fails to include financial measures? What happened? Not answering. Am I audible? Ah, I am audible only. K has a sum of money that she wishes to invest in by WY PLC. She has identified that. She has identified that YW's return on capital employed has fallen over the last year from 12% to 8%. Which one of the following statements related to WY's falling ROCE is correct? ROCE, what is the equation for ROCE? Return on capital employed. So ROCE has return or profit in the numerator, and in the denominator they have capital employed. So these are the two variables which are taken for calculation of um, return on capital employed. So in this case, they have seen that there is a reduction in the profit, that is from 12% to 8% it has reduced. Which one of the following statements relating to YW's falling ROCE is correct? What two reasons could be, I mean, when will ROCE reduce? When the numerator when the numerator reduces or decreases, when the numerator decreases, or the other option is when the denominator increases. So when you write the formula, ROCE is equal to profit divided by capital employed. When the profit reduces, capital employed increases. These are the two reasons when we see ROCE. I mean, as much as the increase in capital employed, if it is not reflected in profit, let's put it that way. Which one of the following statements relating to this one is the correct? A says it may have been caused by falls in the level of equity within WY during the year. So equity fall doesn't result. Equity has to rise, then only so A is ruled out. B, it may have been caused by unusually large dividend payments during the year. Large payment of dividends is not the case because profit here is EBIT. Profit is not a profit. Um, uh, the retained earnings is not profit because profit available uh, to the shareholders from that dividend is deducted, then retained earnings. So because that was deducted that the profit has come down is not the criterion. The numerator is a different concept altogether. It takes into consideration because the total capital, the profit aspect here is precisely EBIT. So EBIT, after that I should be deducted, T should be deducted, then comes dividend. So the payment of dividend has no impact on EBIT. That EBIT is reducing. Therefore, B also can be ruled out. I hope I am clear, Sunita. From EBIT, I, then T, then comes dividend. So because we are restricting it or we are limiting that concept of profit at the point of EBIT, whatever is the payment which is made after that will not be affecting the numerator EBIT. So numerator is unaffected. So B also is not the case. What happened? You are not responding. C talks about it may suggest that WY is a less attractive investment than it was last year. C is the answer. Then D says it may indicate improved cost control within WY during the year. C is the answer. Why do you think C is the answer? It may suggest that their profit was reduced. Their profit was reduced, therefore ROC has reduced. Okay, done. So any concept is there, elaborate on that. Then it becomes much clearer for you to arrive because MCQs are very, very tricky. All MCQs, and unless and until it is a very straightforward, simple answer. If it is in the form of a case or mini case, then all answers seem to be correct. So elaborate on that, and then you can identify what is. On 36. POG Limited is a fashion design, manufacturing and retail company which is designing a new performance measurement mix for its employees. It currently only uses financial measures but is considering including a number of non-financial measures into the mix. Which of the following are factors that would encourage POG to include non-financial measures in its performance measurement mix? Apply all, select all that apply. Select all that apply. How many we do not know. POG Limited is a fashion design, manufacturing and retail company which is designing a new performance measurement mix for its employees. A bit says that POG's wishes to keep the cost of measuring performance as low as possible. E is an option. POG wishes its performance measures to be consistent across all divisions. We're talking about non-financial measures in its performance measurement mix. Why do they want to consider non-financial? That is what you have to focus on that. Because there's not much content which is given. They are into fashion design, manufacturing and retail company which is designing a new performance measurement for mix for its employees. It currently uses only financial but wants to consider non-financial. Which of the following are factors that would encourage POG to include non-financial? Which factors will encourage them to include non-financial? So that is what we have to understand. Why are they focusing? Anyway, they are measuring it in terms of financial, but why non-financial is the point here. So C is answered by many. The number of complaints relating to POG's product quality is rising. Therefore, they want to maybe they are focusing on the customer satisfaction. Therefore, C can be a um, option. A says that POGs wishes to keep the cost of measuring performance as low as possible. Where is the concept of cost of measuring? By measuring other things, maybe they will have to incur more amount of cost because non-financial measures are also considered. POG managers want to ensure that all measures are free from subjectivity. That is also not given. Free from subjectivity, then non-financial are not objective. And when you talk about certain aspects as quality, efficiency, they are not objective. So when they are thinking of including non-financial, then uh, it is not the case. It's, yes, they might have received number of complaints from the customers. Customer satisfaction was not there. Therefore, they would have considered this one. Okay. D says many of POG staff have no understanding of POG's company finances. Then POG wishes its performance measures to be consistent across all divisions. So between the two of them, which one is correct? One of the disadvantages of financial measures is it is not easy for non-financial professionals to understand financial measures. Non-financial measures are easy to understand, easy to calculate, even by the non-financial professionals. That is one important point which we have considered there while looking at what are the advantages, disadvantages. So we go with this one. POG staff have no understanding or less understanding. Let's put it like that. Therefore, they are thinking about going for non-financial measures. Okay, 137. X is a mobile telecommunications company. It provides a network through which calls can be routed and enters into agreements with mobile telephone users. Some of the users buy call time, messages, and data in advance, pay and go, while others pay a fixed amount each month in return for a package of calls, messages, and data with a limit set for each uh, contract. X is in the process of introducing the balance scorecard as a means of translating its mission into action. As part of this process, X has identified a number of objectives, balance scorecard perspective and the objective. So we have to match them. So, financial perspective, what is it? Learning growth. It's a very simple question. So please quickly tell me. A is 3. Okay, then B. C is 4. Customer perspective. And reduce number of calls which fall due to network faults by 45%. D is 4. Reduce number of calls which fall due to network faults. So less defective products, internal business process. Yes, D is 4. Then learning and growth. B is 1 because B is innovation. Develop 5 new contract packages over the coming year. It is innovation. B is 1. C is reduce total number of complaints received by 15%. So that's the combination. CRR offers tax planning and advice services to its customers through a chain of offices and is currently undertaking a balanced scorecard process within the business, which identify which two of the following would be classified as internal business process indicators within the BS framework. two? Which two? Which two? B, C, A, C. Internal business process. So indicators within the number of errors in client tax returns submitted by CRR. The average number of hours of training CRR underwent in the last year is learning and development. The average time taken to calculate clients' tax liabilities, the amount of money invested is a financial perspective. So A and C are right. Why is A right? A is talking about how do they. Now this is a services business. So what are they looking at? They are undertaking the tax returns issue. So the number of errors in client. So no defect to work. Fine. Then the average time taken. So the setup time, operating type, cycle time, all of them come under a part of internal business process. So A and C is correct. 139 question. O is a charity that protects and maintains an area of forest which is home to a number of important animal and plant species. O is also responsible for maintaining safe paths for the many visitors to the forest. Which one of the following would be an appropriate financial indicator of O within the BS framework? The change in O's return on capital employed for the year, O's operating profit margin for the year, O's investment in the development of new paths for visitors, the efficiency in the use of O's fundraising expenditure. Um, very nice. The point is okay. B cannot be the case because we should know the nature of the business. It's a charity. It is a not-for-profit organization. So profit does not fit into here. That is the concept. Otherwise, otherwise for a profit organization, profit margins can be a financial indicator. Then D is the case. Why? Because it's a charity and they depend on cost benefit analysis. So whatever is the amount which is invested, what benefit do they get out of that is cost benefit analysis. So the efficiency in the use of O's fundraising expenditure. So how much benefit do they get out of that? Then 140 says, which three of the following are drawbacks of using the balance scorecard model? The balance scorecard does not provide a single view of performance which can lead to confusion. There is no, which three? You tell me which three. Limitations of BSC, balance scorecard. A is there, E is there. The BSC does not provide a single view. That is the absolute answer. Then E, you say measures within the BS can conflict with each other, leading to confusion. Yes, this is also appropriate. One more you have to select. B? Do you say B? There is no clear link between balance scorecard and shareholder analysis. That is the right answer, because the balance scorecard is understanding various perspectives and how to improvise on those perspectives, not focusing on maximizing the shareholder's value. Therefore, it doesn't go with the shareholder analysis. Which one of the following would be classified as an external effective measure within the Lynch and Cross performance pyramid? Let me put that slide to you so that you can have a look at what is um, okay, this is performance pyramid by Lynch and Cross. Okay, let's get back to the question. External effectiveness measure within the Lynch and Cross performance pyramid. Cycle time is with internal, waste is internal, productivity is internal. External effectiveness measure is quality. A50 runs a factory which manufactures speakers. It has identified that a major critical success factor in its market is the quality of the speaker. Which level of Lynch and Cross performance pyramid would this measure be included within? One 143. Which three of the following are dimensions of Fitzgerald and Moon building block model of performance measurement? You want to see the model? Okay. The dimensions of profit, competitiveness, quality, resource utilization, flexibility, and innovation. Profit, quality, flexibility. Q is considering the adoption of Fitzgerald and Moon model to help him design a performance management system. From his studies, he is aware that the building block model stresses the need to set dash, which are seen by employees as being both achievable and fair. The dash have to be chosen carefully to ensure that they are within the control of staff and of a sufficient size to motivate them. Use the options below to fill the missing words in gaps 1 and 2. One is C standards, yes. And then two is, then what about two? The dash have to be chosen carefully to ensure that they are within the control of the staff and on the um, one is standards, two is rewards. Yes. 145. VG is planning to introduce a new benchmarking procedure within its organization but is unsure which type of benchmarking would be most appropriate. It is aware that each type of benchmarking has certain drawbacks. VG has identified that dash benchmarking is often difficult to undertake as it is difficult to convince the other party to share information about their operations. Dash benchmarking is unlikely to suggest any truly innovative solution and is typically only useful where the organization feels that conformity of service is crucial to its operations. Finally, dash benchmarking often falls to provide data on the benchmarking company's core function as it requires the organization to benchmark itself against an organization in a different industry. You see options. The first one, whether it is process internal competitive. So benchmarking under one, what does it go? The first one, it is difficult to convince the other party to share information about their process. Who would not share the information? Two is B. Two is B. One is one is C. Why? Because competitors would not share the information because of the confidentiality issues. So, competitive benchmarking, there is a difficulty in getting the information for comparison. Two, someone wrote two as B, Disha. Okay, B internal. Dash benchmark is unlikely to suggest a truly innovative solution and is typically only useful when the organization feels that conformity of service is crucial to its operation. So 2 is B internal, 3 is A. Finally, Process benchmarking often falls to provide data on the benchmarking company's core functions, as it requires the organization to benchmark itself against an organization in a different industry. So 146, KV operates a van rental company through a chain of around 35 stores. It has received a number of complaints from customers about the service they have received. KV's investigation has revealed that different stores are offering radically different levels of service to customers, with many stores providing excellent customer service and others performing poorly. KV is the current market leader in the van rental market with a market share which is significantly ahead of its nearest rival. KV's managers are still keen to ensure their market share does not fall and have decided to undertake a benchmarking process to help the business standardize the level of service it offers to customers across its business. Which one of the following types of benchmarking would be most appropriate for KV to adopt? Most appropriate. Which one do you think is the most appropriate benchmarking here? What happened? No response. Guesswork at least something you please answer. No. D is the right answer because they have 35 stores. These stores are offering different services. Therefore, now they have to consider about internally comparison, and they are much ahead of their rivals. So, competitive benchmarking is not an appropriate one because they are the leaders there. So, D is the appropriate answer. HUPLC is a multinational company that is considering a new project. While the project is still in the planning stage, HU is keen to ensure that the project is run in a way which is consistent with the shareholder value analysis approach. Which two of the following are consistent with the SVA approach? Consistent with SVA approach. Consistent. B and C? Yes, B and C are right. A, adjusting the reported figures for the project to remove the effect of gap is a reconciliation there. That is not about shareholder value analysis. And these also not appropriate because it is not about including brand value and goodwill. That is also not the case, but it is about maximizing their profit. Fine. 148. You have recently been talking to a colleague about the use of triple bottom line reporting in your organization. What are the three P's in on the first one is profit, the three P's: profit, people, and planet. Triple bottom line reporting would involve us measuring our organization's profit as well as our impact on people and the planet. Measuring all of these things is very straightforward for most businesses. It could be a useful way for our business to encourage staff to make efficiency, cost savings, and could even help us attract ethically aware staff and customers. Which one of the following statement best describes your colleague's understanding of triple bottom line reporting? So rather, you're asked to explain about what is triple bottom line reporting. Uja says it's A. Excellent. There she has shown a total understanding of TPL reporting. Yes, she has shown an understanding of TPL reporting, but the statement is all in favor of TPL reporting. TPL reporting talks about profit, the people aspect of it, and the planet aspect of it. So she says that measuring all of these things is very straightforward and for most businesses. Do you think it is so straightforward to measure profit, to measure people, the impact on people, and to measure the impact on the environment? Profit can be the calculation is quite objective and it can be straightforward, but the impact on people, is it so straightforward? Can we understand? That is a um, overstatement. It is not such. I mean, it's subjective, don't you think so? So for that reason, it is right, but it is not so straightforward. Triple bottom line. The reporting is not so simple and straightforward. Therefore, we can quote it as uh, be good. Okay. We'll take only one question. 149. Now, how many are there? 149, 150, 151, 150. Okay, 152. Simple one. Let's take 152. The integrated reporting framework emphasize the relationship between what it identifies as six capitals. Which one of the following is not contained within six capitals? Not contained. The International Integrated Reporting Council has produced an integrated report. How many are there? 3 are there. And we'll wind it up here. And then we are meeting